Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Friday. It is the 8th of December. My name is Russell Shaw. I'm a senior market specialist at FXCM, and I'd like to draw your attention to my email address, rshaw@fxcm.com. And of course, if you'd like to correspond with me, that is the email address to use. Just going to go ahead and bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep that on screen for a few moments. Hey James, good morning to you. Welcome. Thank you everyone for signing in this morning. It is much appreciated. Non-farm payrolls today, just bear that in mind. We're not doing a live trade today. We'll actually resume that in February, just to let everyone know. We'll resume that in February. Let's bring up our market commentaries disclaimer. And I'm just going to keep this on screen a few moments more. If you can just take a read through that. Excellent. And finally, just our references, which is going to be MarketScope 2.0 and TradingView.com. Let's just go ahead, bring up TradingView.com. We're taking a look again at the real rate. I think this is a chart we're getting used to now. What we wanted, this is the daily, and what we can do is we can put in the neckline here. It's a really strange. It's really a strange pattern. I'm still coming to terms whether it is in fact a head and shoulders top or not. The right shoulder looks complex. So what I've preferred to do is put the line in the sand over here, and we can see that the trend is down, right? We're getting a lower peak and lower trough. I think we're all quite comfortable with this chart. Of course, for us, the most important part of the chart is right on the right-hand side, right? Because that's where the action takes place. So let's take a look at the real rate with the US dollar underneath it. And what we have is we said yesterday that there is a slight divergence that's taking place. Let's just keep an eye on that. We've got the dollar that was moving up whilst the real rate was moving down, and then we actually had a sharp decrease in the dollar yesterday, so there was some catch up. The key driver of that US dollar move was actually the US dollar Japanese yen pair. The Bank of Japan is releasing its next monetary statement on the 19th of December. There have been some comments out that seem to suggest that the Bank of Japan may be abandoning negative interest rates, which is would be quite remarkable. Now, I think that's speculative. I don't know if we're going to get that on the 19th of December, but I would expect Bank of Japan hikes next year. So we're seeing strength going into the yen. So we're going to just take a look at that in a moment. But this movement here, a key driver, the yen. Okay. Hello, Kim. Good morning to you and welcome. Mia, thank you very much for joining and good morning to you. Welcome. All right, let's just go ahead now. Let's bring up the MarketScope 2.0 and just take a look at some of the currency pairs. Okay, let's just see what's happening in terms of the majors. Good morning, Michael. Welcome, as always. Raj, good day to you, and thank you very much for signing in. Welcome. All right. Here's the US dollar. Now, what we have been looking at here is this movement below the 30-week exponential moving average. Again, I think we're comfortable with the fact that the US dollar has moved down. It's on the weekly chart. It's dipped below the 30-week exponential moving average, and that 30-week exponential moving average has pointed down. And let's take the 1 out for now. Take a look at the weekly candle. What kind of candle is this? Okay, this is really interesting. It's quite a good candle for us to take a look at, because potentially there was going to be a bullish reference candle. In other words, if we closed above last week's high, then we would have had the requirements, the 3 conditions of a bullish reference candle reversal. We don't have that. This week's candle has now got a big selling tail on it. It's got a big selling tail on it. We're below that 50-week exponential moving average. Let's go through to our daily chart now. The US dollar is a most fascinating chart to analyze. I'm enjoying analyzing the daily US dollar chart, FXCM's US dollar basket, because of the order. We've mentioned how orderly it's moving. There's a series of lower peaks followed by lower troughs. We don't get this all the time, but this is really a lovely trend that has unfolded. And what we've done is we've been looking for this lower peak, haven't we? We've really been looking for this lower peak, and we got it yesterday. Okay, you can see it's come right back down into zone 3. Okay, let me just fix this up. Let's come right back down into zone 3. What we did yesterday, again, fascinating. If you followed yesterday's webinar, let's take this trend line break out of the picture. Okay, and then we drew in this upsloping trend. Now, look at how it's broken below. Okay, it had not broken below when we put it in yesterday. So the trend line break, the movement into zone 3, very strong candlestick down. I think the next step is, let's take a look at resistance levels, right? Let's take a look to see if those resistance levels are holding. All right, let's bring that up. We're going down to the hourly chart. Now, kind of putting this wedge, just carrying on from yesterday, putting this wedge, the breakdown, right, let's take this wedge out. That's no longer our concern. Now we move to the right-hand side of the chart. Okay, we're at central pivot. We're at the central pivot. Our key resistance level now is the central pivot. Is it going to hold price or not? So what we can do is we can put in a price. Let's just see. Okay, I'm just going to put it in from here. Yeah, we've got some resistance here. Let's see if the central pivot is going to hold. If that central pivot holds, don't predict. I don't know if that central pivot's going to hold, but I'm looking at it as a key reaction. I want to see the exponential moving averages cross down. I want to see these move. I want to see the stochastic cross down. If we don't get that, okay, then we look for the next resistance level. Where's the next resistance level? Next resistance level's here. Okay, this one's quite a powerful one. You can see how the market's paid attention to this level. And if that's not going to control dollar, then we go all the way to R1. But we're going to keep an eye on the central pivot first, see if that is going to give us the technical signals that we are after. Right, let's take a look at the US dollar Japanese yen. It's not one that we look at often. The reason we don't look at it often is because there's yield curve control by the Bank of Japan. So as soon as there is some sort of interference, the currency not really open to market forces, you know, don't normally pay attention to that because there's a prejudice against us, right? In terms of the trade. Let's take a look at it now, given the fact that the market is perhaps, is expecting that on the 19th of December, the Bank of Japan might, now this is very speculative, might abandon its negative rate, negative short-term rates. Let's go through to US dollar Japanese yen. Okay, let's do a top-down analysis here. We're moving that the week exponential moving average. It's looking like it's going to close below that 30-week exponential moving average. That means that if it closes below the 30-week exponential moving average, the next open will be under it, okay? And then we can see that the 30-week exponential moving average is starting to curl over, but take a look at this, guys. Okay, you can see that the RSI has dipped below 50. Now that's important because when we are above 50, we have remarkable movements ups. When we're below 50, there's pressure to the downside. There has been this yield curve control that's definitely biased the momentum to the upside. In other words, a Japanese yen devaluing against the US dollar. That looks to be changing. That dynamic looks to be changing, right? Go through to this chart here. This is fascinating. Okay, this is, now we've got the 5-week exponential moving average, we've got the 10-week exponential moving average. We went overbought over here, that was sort of into November. We're now broken down, and you can see that the EMAs have crossed to the downside as well. So there does seem to be a dynamic shift, a paradigm shift in terms of the US dollar Japanese yen. So this is one that potentially we'll keep an eye on. Another way we're going to take a look at it is we're going to take a look at it in terms of the spread between the yields. So let's go all the way back to tradingview.com. Okay, now what we're going to do is we're going to put the US dollar Japanese yen at the bottom. So let's just change it up. So US dollar Japanese yen. Okay, I'm just going to choose the FXCM instrument here. Okay, let's put this on weekly. Okay, now what we're going to do is going to change the top chart. What we're going to do is we're going to put, let's take a look at the 10-year. So we're going to go US 10-year. Why am I doing the US 10-year first? Because the US dollar Japanese yen, the base currency is the US dollar, minus the quote currency, which is the JP. So here's the JGBs. Okay, put those in. Let's bring that in. Okay, now take a look at this. We've got the US Japanese spread. Look how it's starting to come down. Okay, the vertical line can be put right about there. So we've got an upward movement to the left of that vertical line. Here's that upwards movement in the US dollar Japanese yen. Now, okay, now what's happening to the spread? It's starting to come down. What's happening to the US dollar Japanese yen? Starting to come down. Isn't that interesting? Okay, so we're going to have to watch this monetary policy statement on the 19th. All of a sudden it's become a live meeting. All of a sudden it's become a live meeting. Let's go through to the correlation coefficient here. I think it looks very close to being mirror images of one another. So let's go through to indicators. Let's put in correlation coefficient. Okay, and make sure you put in US dollar Japanese yen here. So I would suspect this to be a very close correlation coefficient, and we've got 80%, 81%. It's very, very strong. It's on the longer term chart. The short-term chart is also important because the negative interest rates is what's been speculated on here. So what we're going to do is we're going to just take out the US 10-year and we're going to make that US 2-year. Okay, so we're just going to go O2s and we're going to make the Japanese O2s. Let's just take a look at the correlation coefficient here. Okay. Now that's interesting. It's not quite as strong as the 10 years. The 10 years seem to have more of an influence. What you can see though is it looks as if it's starting to move up again. There, let's put in the vertical. Sorry, let me do that again. The vertical, there we go. So you can see that as the spread is down, so is the US dollar Japanese yen. Okay, so let's just keep an eye on the monetary policy of the Bank of Japan. All of a sudden, US dollar Japanese yen seems to be coming back into focus. All right, if there's any questions around that, because it's, I think, quite a prominent Forex story, the Bank of Japan certainly hasn't been cooperating, so to speak, with speculators. Yamiya says they look exactly the same. It's very interesting, isn't it? Looking almost exactly the same. I'm assuming you are referring to the 10-year spreads. Yeah, but I agree. Absolutely, I agree. All right. Let's just take a look now at the risk side of the market. Let's go back to market scope. Let's go through to the DAX because we're approaching the DAX open. So let's go through to the German 30 here. Okay, cool. So gee, I'm having trouble with this chart. Did negative interest rates work effectively for Japan? Yeah, listen, James, it's a very good question. It's been a multi-decade project, so to speak. The Japanese have been battling deflation for decades. I think that it's finally starting to pay off. They're finally getting to sort of a 2% inflation. I think it did work. I think it successfully worked. That's my opinion. Okay. Let's just take a look at. I'm having trouble with this chart. You guys, you're certainly welcome to give me your opinion. I'll tell you why I'm having trouble with this chart at the moment. First of all, I like the chart. I think it's a good looking chart. We've got the 5-week exponential moving average on top of that 10-week exponential moving average, and of course we've got the RSI positive. That's fantastic. I'm just changing to this weekly chart here because it's slightly different. I've drawn in the resistance area, and I'm feeling, and so far the market's not cooperating with this analysis, but I'm feeling as if this is a significant resistance area. Why do I think that it's a significant resistance area? Because on the daily chart we are simply overbought, and I think that at some stage that overbought condition needs to normalize. The longer that it stays overbought for, the more vicious the pullback's going to be. I don't think this is going into a downtrend. That's not what I'm suggesting. But what I am suggesting is that I wouldn't be surprised to see some pullback before we move up because of the daily condition. That daily condition to me hasn't cleared, and I'm very nervous about that. So yes, the DAX is looking good. The DAX is looking great. Okay, but I would say there is a risk there. There's a tail risk, and what's a tail risk? It's overbought. It's very, very frothy. One more chart, and then we're going to conclude. We're going to just take a look at gold, which is a really interesting chart to be analyzing currently. So let's just go through to gold. Okay, and I just like the way this higher trough, higher peak has charted. Even if there is some sort of pullback here, I don't think that upsets the balance. I think we get the next higher trough, higher peak until proven otherwise. 2000 is a key psychological, and I think the fact that we're pulling back in gold is something that we certainly need to be aware of, because it's potentially a dip in an uptrend. We've got a beautiful looking RSI. The fact of the matter is there was a spark up in terms of the daily RSI, and that's pushed down back to normal territory. And I think that we just need to watch gold. I guess liquidity's dropped off in the last 3 days. We're not getting these nice real bodies on the candlesticks. I'm still very interested to keep an eye on the EMAs. So you can see we've moved sideways, no real volatility there. I'm looking to see if we get a positive cross to the upside. We have got a clue from the stochastic. The stochastic has, but we don't. So the momentum seems to be suggesting a pickup, but we don't have the trend following indicators cooperating yet. So we want the trend following indicators to push up. And then I think that we just got to see if the stochastic makes its way through to the upper quintile. Very interesting chart. Just this after that kind of spark, just seems to be some sort of consolidation going on. Let's keep an eye on that. All right, that's as far as we go this morning. If there are any comments, questions, please go ahead, type those in. All right, let's wrap up here, guys. Thanks very much for your time. Have a great day ahead and a great weekend. We shall chat on Monday. Thanks very much, guys. Cheers.